Okay, so we're going to talk about recovery zone hedging. A lot of you that have been with me for a while are familiar with recovery zone hedging. Um, this is my modified version of, which is really simple. Um, where's my, yeah, it's really simple. What it basically is that it's like you can use them on netted accounts. Like, um, what I'm saying is we're not in the USA, we're not allowed to hedge. So I have to come up with other ways of hedging, right? To kind of get around it. So like this is an example. On one side, which is kind of a little, you have that gap because of the the spread, but this is 30 pips. Okay, let's remove this. This is 30 pips. I don't know why it doesn't. Let's see. Oh, it doesn't let me go further than that. Oh, I was about to say, like it should. So this is 30 pips gap on your AUD. I put 100,000 units. Um, it's a short, right? There's no SL on here, so there's no SL, but there's a TP, which is 70 pips. Wait a minute, I put yeah, I just thought I put 100. 70 pips away from the entry. So it follows the 40-70 rule, where price comes out of this point, does a 40 pip move, then the next move is going to be 70 up or down. Then I have the buy stop here, which is at 300,000. Has the, see, that's the one I was thinking of. Has the 70 pip TP above, right? Create that sandwich. This is on a netted account. See, this comes here. This will close the 100,000 and double the order. It'll be 200 going this way. And then you're just going to flip it, right? You're going to put a next order down here to close 300. You're going to have to, this one has to be, would have to be 600, but you got to close 300. So you have to say 900,000 sell, right? But what happens, the benefit is in our recovery zone, as we have done the strategy and all the time in the past, is we have, left those orders open and just collect the difference in the end. Okay, our losses, profits minus the losses, right? So we have a profit in the end. With this one, it's going to close the trade. So your stop loss really is going to always be just 30 pips. So, um, let's say we have, you know, the line. Oh, wait a minute, that's a terrible line. So I forgot how to use this too. It's been a while since I've used this. Um, Trying to use the free. Always use the free stuff. Sticky note. Whoops. Oh, well, I'm gonna have to do my own line. All right, pretend it's perfect line. Here's 30 pips. Okay. Took the time to write pips. Okay, there's 30 pips. Up here is our TP for the short down here, and then the TP for the buy, right? So this would be buy stop. So now as we have done it, we've always done it to where prices, these stay open, right? So that means the buys SL was 100 and the sells SL up here was 100. We're not going to do that no more. What we're going to do is we're just going to place an order that's pretty much, I think that's three, right? Three times higher than the previous order. So if I have 0.1 lots, my pending, I'm like writing it out. I can't, this is terrible. I can't write it out. My pending order is actually 0.3 minus the 0.1 that will be executed, right? Will leave the open order on the opposite side of 0.2. And I do this each time. So to close the 0.2, on the next time it hits it, right? Where we gotta be. We would have to be at 0.4 left, right? So close the 0.2. So that means the pending order has to say 0.6. Remember, these are on, netted. These are good for netting accounts. You still do them on Hedge, of course. I think, right? No, you can't. These are for netted account. Because it's going to keep that other order open. You would have to have an SL at 30. On the Hedge accounts, you would have to have your SL 30 for the hedging accounts. On the netting, it just simply needs to be just your pending order closes trade. There's too much writing on here. They're getting button. I'm losing space now. Okay. Do my best to write neat for you. Which will leaves open, right? So we want to go above and beyond on our netting. We want to go above and beyond for the pending order so that we still have something opened on the other side. Don't forget, it's a 40-70 rule. With the exception of, I think, RJPY, it just kind of goes straight to target a lot without even doing the 7 to 47. Um, sometimes, yeah, because it just moves great distances, it just goes far, and it kind of goes straight there. So I don't hedge it that much because um, it can get you in a trap where you started too high because you think it's gonna go, and then you end up too. Okay. Now another thing is that since the orders aren't staying open, it frees up your equity. Uh, like net style. I guess we'll call it net style hedging. Net style uh, recovery. Okay. So 40-70 rule is, price is doing this. It's gonna go somewhere like do that, go like this, come back, and can go here or go back in and go up here to 70. So here would be between a 30 to 50 move that fails and ends up going back to retest or break, okay? And the next move will be 70. So that means that 40 pip move, sometimes it's exactly 40, like precisely, means that the 70 is next. Absolutely. 70 is coming. That is a guaranteed. I have done this for years. It is guaranteed. Next, guaranteed. You hear that? Okay, guaranteed. Capital G. So, so that's going to be the net and style recovery for the net and style recovery zone hedging. Actually, it's a little better because if I go start at 0, 1, how do I erase this whole thing? Highlighter, small joint, eraser. Okay. How much time are we on here? Okay. All the way down. And the winner, okay, the winning trade was actually 0.64. Now this is going to be an average for the Forex pair. Um, Adding them up, your first loss 2.09 at 30 pips. Remember, the 30 pips close, 30 pip SL on all of these. Then this one went to 70 TP. So the minus 01, 02, 04, etc. So it'd be minus 417 roughly, minus 834. These are going to be the piling of the losses, right? Minus and all the way to 32. The last 32 will be minus $66. 73 cents. Okay. The winning one ends up being a plus 311.42 minus all the losses. So you add those up, 1, 2, 3, all those, like 6 of these, right? It comes to minus 131.88. Your profit ends up being 180.04 because you closed the smaller trades at 30 and you took the double size trade at to 70. Okay, so you always will end up with a profit in the end. So it's a 100% winning there. So imagine now all of these 6 are closed. This creates a higher potential for your account to handle a larger size lot size, a larger lot size to be available. And because in the recovery zone, when they stay open, you're using all of that equity. And so just calculate it and you're using way more margin and you're going to end up, you can end up having a margin call. So this helps um, your margin. Okay, big plus. So, and that's going to be my, new style recovery zone. Just leaving them all open. Anyway, um, yeah. So make sure to like and subscribe. Uh, Hit notification bell because sometimes I put posts up. Um, yeah. So I'll see you on the next one. And this one's about to take. Look, it's near the end of the day, Friday. It's about to take, and it's gonna cut. This is gonna turn off, and it's just gonna say 200. Continue this way, right? And I'll make a new order 6, and make it, make it. It'll be 4 and all that. All right. So I'll see you in the next one. Like and subscribe. Have a great weekend. And I'll see you in the next one. Peace.